So there's a lot of loan officers just making a mistake and they don't even know that they're doing it. And and it's not their fault because it's likely nobody's ever actually pointed this out to them. So that's why I'm going to just spend a few minutes here. I'm running solo here. Actually, it's a Saturday evening, right? It's Saturday evening. Go, Carl. What are you doing recording a podcast on a Saturday evening? I don't know. Just kind of sitting around chilling here today, and I was sitting out on the front porch and I started pondering this, and I just wanted to share it to you real quick. So we've all heard loan officers say, with great pride, "Hey, 90% of my closings are purchase deals and not refis." So, like that's some kind of badge of honor. I've got 90% purchases. That's not a badge of honor. In fact, that's a huge mistake. That's a really big mistake. Now, I get it. The reason so many want to use that as their like victory chant is because what they're really saying is whether rates go up or down, people are still buying houses and my mortgage business is stable and not reliant on refis and, the dropping of rates. And that's somewhat true, but there's a huge flaw to that is likely costing them tens of thousands of dollars per month, and they don't even know it. So that's kind of what we're talking about here. So I think you've heard me mention here before that I found that the most healthy and stable ratio tends to be around 70% purchase and 30% refinance. And here's why. So if we're refi heavy, doing more refinances than purchases, well, they're right. When rates go up, these cats fall off the highway faster than a 1971 Ford Pinto on bald tires, right? So those are the ones that get in trouble. Like they do real good for a year or two during the refi boom, and then they're pumping gas the following year. So the real problem with that is, now that these loan officers, which have been ignoring the realtor relationships for purchase referrals, right, all of a sudden they're starting from scratch and trying to reestablish or trying to establish in the first place realtor referral relationships, which doesn't help them with closings this month, right? It takes time to do that. And here's the thing, though, if we're purchase heavy, like the loan officers that are boasting that they're 90% purchase, that means that they're not farming their own past database for refinance opportunities. And frankly, that's got two problems. So, problem number one, I feel like we have the moral obligation to help our past database when it's in their best interest to refinance. And they haven't been made aware of this opportunity, right? Which is kind of our fault. And number two, we would be missing out on these closings, which can add up to huge when it comes time to, how much money we're making for the month if you're not getting all those refinances. So number one, it's our obligation to let them know, hey, you have this thing going on. This would be a good time to refinance, right? And yeah, so it's twofold. It's not just the money part. It's frankly, it's the right thing. So I don't believe in talking somebody into refinancing. I believe in showing people the opportunity that's there and let them make up their mind with the information that we share with them. So just as an FYI, last year, my mortgage team, right, it's one of the largest ones in the nation, ended up closing about 68% purchase and about 32% refi. So very, very close to the holy grail of the 70% purchase and 30% refinance. So earlier in the year, if we see that that we're trending purchase heavy with more than 71% purchase, then we know we need to up our game with marketing to our past database and looking for opportunities to help them, right? And by the way, if you're brand new to the industry, right, let's just call friends and family as part of your past database. Now, if we see that we're refi heavy, which is going to be my suspicion, this market that we're entering, there's going to be a lot of loan officers come January, February that I think are going to see themselves as being refi heavy, which is more than 31% refi. Then if we find ourselves in that situation, we know we need to step up our game on our referral partner marketing, which is actually pretty easy. So using that matrix, whether rates go up or down, has never really had an effect on our growth. In fact, we've grown each and every year, whether rates are going up or down because of that 70-30 mix. And always remember that with the refis, a lot of our people aren't refinancing to get a better rate necessarily, even though, some are. They're doing it for cash out, debt consolidations, maybe to cancel mortgage insurance, perhaps getting somebody off the deed, maybe cash out to buy a second home or an investment home. I mean, really any number of reasons. In fact, I put together a little piece of paper here recently, and it was something like, I think it was like the 74 different reasons for somebody to refinance. And like when you're talking to them, when you're calling your past database, you're just looking for some of these cues or maybe trigger conversations to look for the refinancing opportunities. Like, oh, let's say, hey, I just got a new job, they say. And we go, awesome. So are you going to be working more out of the house? Like, are you needing a home office? Are you still going to be showing up at the office? And so it's these little trigger conversations that we can look for those refinance opportunities. But the bottom line is we don't know how we can help them if we don't actually call them. And we call them, and I recommend that you do. And it's a very, very simple phone script, and I'm happy to share it with you and to check in and see what opportunities there are for us to help them, right? And in the process, you make a commission check. So probably what you ought to do right now is take a few minutes and look to see what your ratio is at. Like, are you at the 70-30? Are you 60-40? Are you 50-50? Like, just kind of see where you're at. And that'll help you decide whether or not you should be focusing in on the refinances or should you be focusing in on the purchases. And so it would be worth your time just to kind of take a few minutes and look to see where you are. That'd be a very good use of your time. So hey, if you want a copy of the script that we use to check and call our past database, even if you haven't talked to your past database, a lot of people hesitate. Go, Carl, I haven't called them in 5 or 6 years, or I've never called them, right? Or I've called them like once in a blue moon or something like that. We find calling them 4 times a year is the optimal rate. Like calling them 4 times a year, we close the most loans with our past database. And just kind of, and I think I've said this before, probably several times, you should be closing a minimum of 1 per 100 per month. In other words, if you have a past database of say 300, on the minimum, you should be closing about 3 to 4, maybe 5 loans a month from your past database. And oftentimes, by the way, it's not even them as they refer us to their friends, their family, or their coworkers, which is again is part of the script that we use. So anyway, hey, if you want a part of this, if you want to see what the script is, just go to getmoreloans.com, and we'll walk you through exactly what to say to the past database, and we'll even give you the script. Like you can take a screenshot as we go over this, and it'll be a really, really, really good use of your time. So getmoreloans.com and just schedule like a 30-minute talk to. And one thing that we like to do is we like to demonstrate we can help you by actually helping you, right? It's a very novel approach, I know. And so we demonstrate we can help you on these calls. And, our thought is like you're going to get on that call and you're going to get the great help. You go, gee, I like this. Could I have more of this? And we'll talk about that. But you might go, hey, no, I totally got it. I got the script. I'm just going to focus on calling my past database. Well, you'll have everything that you need, by the end of the call. And again, all for free. So getmoreloans.com. 70-30. Boy, that's been a really game changer for me. So make sure you're in that range. And so go look to see where you are. So anyway, I think that's about it. I don't want to carry this on too long. So hey, thanks for letting me be part of your day. Thanks for forwarding this to your loan officer friends. I really appreciate it. And I'll talk to you when you call in on that getmoreloans.com. So thanks again. Hope you're having a great weekend. Actually, you'll be listening to this probably on a Monday or Wednesday. So, but either way. So I think that's it. All right, gang. Thanks again. We appreciate it. Talk to you when you call in, and we'll see you also right here on the Loan Officer Freedom podcast. Thanks again. Hey, and thank you so much for helping us be the #1 podcast for all loan officers in the entire nation. Really appreciate you guys forwarding this, and I really appreciate all those great reviews. So thanks again. All right, that's enough. I'll see you. Bye.